Oh, wow.
Pockets.
Okay. Let's share the screen.
Lisan Gaib. That's from Dune, right?
Yes, sir. I was very into the books, and then I found out from my Persian roommate that Lisan al-Gaib is a pseudonym of a poet as well.
Yeah.
Yeah.
I did not know about the poet part, but
Okay. Johnson, would you like to start the
yeah, absolutely.
yeah.
Yeah, thank you, Victor. Hello, everyone. Welcome to DeFi Toronto's last meetup of the year. We are absolutely thrilled you guys could join us. It's been a fantastic year. We hit about 3,000 members all over on a meetup page. And I know like all 3,000 couldn't make it tonight, but but at least like the thing is like, we're those who could make it, like, we're staying pretty strong. I know that over the past couple of years, like I keep getting messages on Meetup like, hey, save this group, hey, save that group, and there are lesser and lesser people hosting meetups nowadays, like lesser groups. But thankfully, we could continue hosting meetups this year and also in the years prior. And this would be like, we made it just in time for the next bull market. And like, we are glad all of you are here with our journey and like supporting us and supporting this community and making this like one of the landmark crypto communities here in Canada. So thank you very much for that. And with that, like, I would like to start off our meetup in introducing our team, Victor, Mark here, and our speakers. Yeah, we'll get to the speakers soon. But like, yes, so here's the team. Victor and Mark are here. Unfortunately, Alim or Safia couldn't make it. But yeah, I could give like a short introduction. Alim, he's a product manager at Delve. And Safia works as in charge of events for ETH Global. All of us here, like, we do maintain DeFi Toronto as part-time, but like this is something that we volunteer and we love doing. And then I could give like a quick introduction on myself. I work as a marketing manager for Virgo CX. We're a regulated crypto platform here in Canada. And then I'll hand it over to you, Victor, to introduce yourself.
Oh, thank you. As some of you might know that I used to work on Bay Street in traditional finance, particularly the pension fund investment for over 2 decades. Now I'm working for a crypto hedge fund, so I do fundamental research to support our investment decisions. So I use a lot of fundamental on-chain data to do analysis. And so that's a little bit about me. Pass to Mark.
Yes, I'm working with Exion at the moment. We are a subsidiary of EDF Group. EDF Group is the largest utility provider in Europe, and it has a seat on the EDERA Council. Exion, what does Exion do? It does secure, eco-responsible, high-performance compute. And that includes blockchain. So we're running validator nodes for about 10 different protocols, including Ethereum, Tezos, Energy Web Foundation, and others. We have several, a couple hundreds, maybe other nodes that are running RPC. And we're servicing Fortune 500 mostly. For example, SocGen Forge, when they did their issuance of bond on the public Ethereum network from the European Investment Bank with Santander, Goldman Sachs, we've been there helping them. So we're very set to work with Fortune 500. And when I'm not working with Exion and I'm not here spending, volunteering for DeFi Toronto, I'm teaching now at the MBA. I'm teaching a strategy course at International Business University there. So yeah, so that's me, and thank you. It's always a treat to join this community here. We've been like 4 or 5 years now in the making, looking for DeFi summer number 2.
Nice, smooth background change there, Mark. I did not see that coming. But hey, Christmas, that's nice. Well, to kick off an agenda for this meetup, we'll have first the DeFi news recap, hosted by myself, and Devcon highlights by Victor. And then soon afterwards, we will move into the first speaker, Wilson Wu, the CEO of Honeypot Finance, a premier DeFi app on Berachain. And right after that, we will have Lisa Algri, and that is Ed Buchi of Baptisia Ventures, talking about alignment and accountability in the Web3 community. And then we'll finish it off with community announcements at the end. So that's our agenda for today. And without further ado, I think let's start, Victor. All right, so starting off with the news recap, I thought of taking a slightly different approach than talking just about news. And this would be also a thought experiment, but also it would cover some of the news stuff that we've been seeing over the past year. And I want you, all of you, to think about this one question: who is the marginal buyer of Bitcoin, ETH, and Solana? The reason I brought this up is because Victor and I were having this really good chat about this, and I thought it's a really good topic to bring forward in our meetup. So, but just to clarify for those who are not aware, marginal buyer means who is the incremental buyer, not the we already know, assume there's already a set base of people holding those tokens. Marginal buyer would be every additional buyer. So let's start off with Solana. Who's the marginal buyer of Solana? Ignore the Bitcoin there, but the question is, who's the marginal buyer of Solana? Next slide, please. And the answer is pretty obvious. If you had a hunch, it would be meme coin speculators. Well, it is meme coin speculators. And this chart on the left, it shows the Solana's DEX volume by asset type. And what we see is 2021 when Sol, it was dropped, it hit $260 per coin. It was a hot asset at the time. And then it declined in 2022 with the FTX implosion. And then what we see during those times, the DEX volume is very minimal. It's very small compared to where it is right now. You couldn't, just looking at the 2021 DEX volume, you wouldn't be able to say that it's $260, near all-time highs back then. When we look at it now, and you see the breakdown, most of it is coming from memes or memes from Pump Fund. And that is comprising most of the DEX volume on Solana today. And that is the marginal buyer of Solana. If you even look at the 30 days fees, what's remarkable is that Solana, Jito, Radium, these are all protocols on Solana, and they actually accumulated more fees than the Ethereum blockchain, which is quite rare. You would always see Ethereum pretty much on top, and Tether also it's on Ethereum and Tron, but ignoring that, Ethereum pretty much always tends to be on top. But in the last 30 days, Solana is accumulating more in terms of fees. So yes, there is a lot of meme coin speculation, but the fact is these meme coin speculators are willing to pay a lot in fees to continue trading on Solana. And that is your marginal buyer. You would even see if you open, I think between Phantom app and Coinbase app, there's times in your app store that Phantom, it tops over Coinbase, which is good and bad in a way. The good part is you finally have this new wave of people coming on chain, not just going through sexes. They are coming on chain, but Phantom app, it's very easy to speculate on meme coins using Phantom app. So that's the other thing there with Solana. Now, next slide, please. Now let's go to Bitcoin, right? Who is the marginal buyer of Bitcoin? Who is the additional buyer who's buying Bitcoin today? Next slide, please. Number one, MicroStrategy. MicroStrategy, and there are two components. There's people who buy MicroStrategy stock, and people who buy the MicroStrategy convertible bonds. Now, Michael Saylor here has done like some pretty intelligent, like he calls it intelligent leverage, but it's actually pretty smart financial engineering, where he's able to sell MicroStrategy shares at a premium to Bitcoin. And what I mean by a premium is, let's say price of Bitcoin is 90K today, but like every MicroStrategy, MicroStrategy is like 2.5x the times of Bitcoin they have in their portfolio, which means that if you pay 90K, you either have an option to buy one whole Bitcoin today, or you have the option to buy 40% of a Bitcoin through MicroStrategy today. And people still buy those MicroStrategy shares despite that, because MicroStrategy's whole pitch is based on the slide you see. Like this is from the MicroStrategy pitch deck. The slide you see on the lower left is that they are able, through this financial engineering, they're able to increase the rate at which they acquire Bitcoin, which is 13%. But at the same time, the number of shares they issue is much lower than that. So net, which is 4.6% in the slide, and this is just for like 2 quarters comparing, but like the idea here is like they are able to increase the amount of Bitcoin per share for MicroStrategy holders. And who is funding these purchases? Convertible bond buyers. Now, for convertible bonds, like there's a lot more financial engineering terms involved in there, like terms like delta and gamma, but like in a very simple way to put it, these convertible bond buyers fund MicroStrategy because they're able to buy those bonds at a lower volatility, and they're able to sell it at like a higher volatility. So they're able to profit off of that. They're not looking to convert it into stock. They're just looking to monetize the volatility of MicroStrategy stock. Now, that is like slightly advanced in terms of like financial engineering, but and it requires like a lot of convertible bond mechanics. But the way Saylor is like monetizing both of this is that he's taking money from one interested party that is interested in making money off the volatility of a stock, and he's using that to purchase more Bitcoin for those who are buying shares in MicroStrategy. And this is, so every additional marginal buyer is buying MicroStrategy stock, believing that they can like earn more and more Bitcoin per share, even though upfront they're not, they might as well just buy Bitcoin if they're looking to make a large purchase. But yeah, and we see I think in the last 2 weeks, MicroStrategy bought about $10 billion worth of Bitcoin. And next slide, please, Victor. And compared to institutions like ETFs, that's actually more than what ETFs accumulated over the last 2 weeks, which is about, I think, $5.5 billion. So almost double there. And then institutions, ETFs, why are they buying Bitcoin? Next slide, please, Victor. Oops, I think this slide got clicked. So we'll be sharing this deck post the meetup, and each image is like linked to a website. I think, Victor, that image is linked to a website. So yeah, okay. So this is like a screenshot from BlackRock's pitch to its institutions regarding Bitcoin. And you might have heard the term flight to quality by Larry Fink. And what he shows, like it can be depicted in this graphic. It shows like for each geopolitical event, for each like crisis, Bitcoin compared to gold and S&P 500 had like a better recovery on average or overall when you look at the 60 days. Like when you look at the 10 days, yes, it's kind of mixed, like it does perform, but like in the 60 days, it's more clear that Bitcoin outperforms gold and S&P 500 when there is geopolitical crisis. So that is like flight to quality. That's one reason. Next slide, please. Oh, yeah, that's also linked.
Okay.
Yeah. And this is another image from like the investment pitch from Vanek Asset Management. And what this shows is it compares the volatility of an asset, the compounded annual growth rate, and the Sharpe ratio. Now, the Sharpe ratio is the important part. that's what these traditional investors call as risk-adjusted return. Now, if you look at Bitcoin, like 100% Bitcoin portfolio, the second bunch of 3 bars, you see that Bitcoin's Sharpe ratio is 1.16. And if you compare it, like, let's say with Ethereum, right, the third bunch, the light blue bar, it's the Ethereum's Sharpe ratio is 0.83. Now, the higher your Sharpe ratio, the better it is to your portfolio. And when it comes to pitching to these investment managers, they would pitch that definitely, like, you have this asset, you get a better Sharpe ratio, you don't need to like buy a ton of this asset, maybe just a small percentage of like, let's say 5%, and that boosts your overall portfolio returns. Rather than compared to like the portfolio you would have without Bitcoin. Now, the pitch to like get Ether, like Ether alone compared to Bitcoin, is going to be more difficult because Ether has a worse risk-adjusted return than Bitcoin. However, in Vanex's pitch here, in the very first set of 3 bars, they did an analysis on an ideal portfolio which is like 70% Bitcoin, 28% ETH, and that has given a Sharpe ratio of 1.43, which is better than holding just Bitcoin alone. Now, it'll take some time, and we'll see maybe how the investment managers would perceive this, how they would allocate it to their portfolios accordingly. But this is just like the investment pitch that is going on out there regarding the margin, and this would give us like a good idea of who the marginal buyers for these assets are. So far it's like pretty clear who is it for Solana and Bitcoin. Next slide, please, Victor. Oh, Victor, by the way, if you click on the title, that might be easier to switch since like the title is not linked to any website.
Okay.
Yeah. Now for ETH, right? The question is, who is the marginal buyer of ETH? And I want to make it pretty clear before we look at it that I'm talking about ETH as in the asset, not Ethereum as in the blockchain, not Ethereum as in the Ethereum ecosystem of many chains of the infrastructure, not that. Just ETH as in the asset, Ether. Next slide, please, Victor. Now, we could consider DeFi summer, right? Like last time DeFi summer, a lot of people bought ETH to speculate on DeFi. And even this last month, like with Trump coming into, with Trump winning the election, there was speculation that, okay, Trump coming into election means there'll be more regulatory clarity, things will be more clear for DeFi tokens, there could be a fee switch, projects could turn that on. And there was an initial jump, like if you see around November 10th, like there was an initial jump right after the election, but then that got, that corrected a little below, plateaued, and then it went up along, like when the overall market went up. But when we look at the 1 month return, like the 1 month return is for this DeFi index on Index Corp, which has like Uniswap 25%, Aave 22%, all the blue chip DeFi tokens. The 1 month return for this is 47%. Let's compare that with another sector. Next slide, please, Victor. Thank you. So let's compare it with memes. Now in this meme index, like Market Vector is like a meme coin index by Vanek, and the top components are Dogecoin and Shiba Inu and Pepe. In 1 month, it's hard to see in the graph, but that's why I written on the top, but in 1 month, the performance is 89%. Now, this is clear, like, okay, meme coins have outperformed DeFi tokens with like, even post-election. And next slide, please. And you may have come across this guy named Murad. He's like he gave a talk on meme coins and became very famous. It's probably the main character today on crypto Twitter. But like, there's just one slide that I want to bring attention to, and this is this slide. Like, not a lot of his talk is about like pitching on meme coins, but like when we are thinking about utility, we're thinking about DeFi, we will also need to like consider the slide. Now, what he says is that Meme coins, their price is based on completely on speculation. Non-meme coins, there are some fundamentals, but most of it is narrative or speculation. And his whole pitch is like, okay, why are we like overpaying, when fundamentals are so low? If you're paying mostly for the narrative or the speculative or the mimetic value, why don't you just spend it on meme coins? That's his pitch. Next slide, please, Victor. So let's take a look at the fundamentals, right? With DeFi, these are some of the blue chip DeFi projects that was included in that DeFi index by Index Score. I took a look at the fees on DeFi Llama that these projects are collecting. When we look at the top one, right? Lido, it collected 1 billion in fees over the past 1 year. And the token's fully diluted value is 1.5 billion. So it's not, that bad. However, like when you dig deeper into Lido DAO and you look at their where they're, how much they've expended, turns out Lido DAO is not profitable. Like even though they did collect 1 billion in fees, that 1 billion went into operating expenses and like marketing and whatnot. And this is Lido, like it's like collected the most fees. If you go down, like as you go down further, you go down to Uniswap, 848 million in fees, token value, 10 billion. You go down, Uniswap Labs, they implemented, so instead of the fee switch, like they implemented, like if you are swapping on the Uniswap front end, then Uniswap Labs get like a portion of that transaction. That alone came to 100 million over the past 1 year. Aave collected 340 million in fees, token value 2.7 billion. Maker, less than Aave, it collected in fees, and then token fully diluted value 1.5 billion. Ethena, the latest stablecoin project, it collected 161 million in fees, but token value is 8.8 billion. And then, yeah, Pendle also like, so what we see is generally there's a trend of like, newer projects, like the fees, they haven't collected as much, but the token value, the fully diluted value is more and more and more. Like whether is it up to fundamentals? I mean, that's up to you to decide, or how much is it based on fundamentals? It's up to you to decide. I'm just stating like the facts here. Next slide, please, Victor. So if DeFi is, okay, let's say you've come across conclusion, okay, people, the marginal buyer of ETH, if they're speculating on DeFi, they would buy ETH to speculate on DeFi. And if DeFi is not a strong enough narrative, right, if you determine that, then what about the next narrative? ETH as money. Now, this is a narrative that is brought about, like a lot of people in the Ethereum community is propagating this narrative where if Bitcoin is digital gold, like, you store Bitcoin, it's a store of value. Ethereum is money. Like you can use Ethereum, you call it internet money, AI money, whatever, but like you can use it across multiple chains. And with the L2 roadmap, you have like a lot of L2s, and these L2s use ETH, the asset. Now, Ethereum has roughly about, I think there's 120 million ETH out there. When we look at the Ethereum economy, right, or these L2 economies which use ETH, the total ETH exported to these L2 economies is 4.2 million ETH. That is 4.2 million ETH out of a total of 120 million ETH is exported to these different chains. So is ETH money? Is that a marginal, is that a reason for a marginal buyer or every additional buyer to buy ETH? For you to decide. Next slide, please, Victor. Now, when we look at like the past year or even the year before that, right, there is no doubt about Ethereum, the blockchain. It is probably the most secure blockchain out there. When you look at the ETH staked, there's about 34.6 million ETH staked, and at a current token price of $3,300, that is $114 billion that is securing the Ethereum network. That means if you want to like hack, or let's say, this network, you will need to own 66.7% of that security to do with it as you wish. And so 66.7% of 114 billion, like that's the cost to attack Ethereum. So Ethereum is a highly, highly secure network. And even if you look at like the bottom right, it has like, I think 10 or more like clients, software clients that are maintaining, yes, 1 million validators too. Thank you for bringing that up. It is big, like it is definitely big. So that's like a lot of like, and it's very geographically distributed as well, but I haven't put that in here as it, but then if you look at the software clients, there's a lot of software clients that is maintaining, none of them have like a majority. So that means like, even if there's a bug in one software client, Ethereum will still run because the other clients are functional. And this is a feature that is like, I have not seen with a lot of the other chains. Like Bitcoin, even if you take Bitcoin, it runs on Bitcoin Core. That is just one software client for the whole of Bitcoin. If you look at Solana, like I think there's only one software client right now. There's another software client that you might have heard of, people are talking about, called Firedancer, but as far as I know, it's only on testnet, like it's not mainnet yet. So even Solana, like it's only on one software client. That means if there's a bug in these one software client, like it affects the whole chain. All the value, all the activity, the whole chain is affected. But with Ethereum, if there's a bug in one client, the chain will still go on because the other clients are functional, the other clients are good, and it is diversified from like a software perspective. So it's pretty robust from a software perspective. It's pretty robust from an economic perspective in terms of like the staking metrics. And you see like most of the stable coins, like the main reason people use crypto today, apart from buying Bitcoin, like which is stable coins, and that is all like mostly on Ethereum. Like even though ETH has a total market cap of about 400, I think that's about $400 billion or so, the value secured is almost double that. That means the amount of tokens, the token value, all of that on ETH is on Ethereum is double that of ETH's market cap. So there's no question that Ethereum is secure. It's a highly secure blockchain. It's very robust. Projects use Ethereum confidently. You see businesses, you see asset managers talking about Ethereum. But as we move into the next year, as you work on your projects, as you look into the space, as you research further, I would like to put forward that question that's always in the back of my mind, that is, who is the marginal buyer of ETH? And yeah, and that's pretty much it. That's it for our DeFi news recap. Happy to take up any questions, or yeah, I can pass it on to Victor, who will give the Devcon recap. I think Mohammed had a question, like concentrated staking pool. If you're talking about Lido, like that's right now at 28%. It's less than like the determined 33% in order to influence the network. So even, and it was coming close to 33%, but it went down to 28. So even in terms of that, like even though Lido is about, I think 30 validators, like 30 independent validators, if you're taking Lido DAO as an entity, even that only has like 28% of the network. So that is still pretty robust.
Related to the, thank you, Johnson. Related to the client diversity, recently the Su network went down for 2 hours because they discovered a software bug, and because it seems like they only have one client, so the entire network has to have outage for 2 hours. So definitely the concept of a client diversification is not as as popular outside Ethereum.
Lizan had a question on who's the marginal buyer.
Sorry, like what is the definition of marginal buyer? Because you're saying who is marginal buyer? You're asking that question throughout, right? And then I'm like, what is marginal buyer again? Like I know it was like mentioned like 10 minutes ago.
By marginal buyer, I mean like every additional buyer, a new buyer. So like, for example, right now we know Ethereum is robust. We know what over the past 2 years, a lot of people hold ETH. I'm not talking about these people.
Okay.
I'm talking about every additional person, every new person that's coming in to crypto. What is their reason to buy ETH?
Oh, like who's interested and who is yet to buy? Who is interested, one, and has yet to buy is two. These two things means marginal buyer. Okay.
Exactly. That's the marginal, every additional buyer. So like with Bitcoin, we saw every additional person coming in. They're either coming in for MicroStrategy or they're coming in for the investment pitches by different firms and the Sharpe ratio, whatnot. For Solana, we see every additional buyer, they're coming to speculate. For Ethereum, every additional buyer, what reason are they coming for?
Okay, gotcha.
Yeah.
Any more question for Johnson? Okay, now I'm going to move on to just report some highlight from Devcon 7, which just happened early this month. I was there, and I understand Ed was there too. And anybody else attend Devcon in Bangkok? Anyone want to raise their hand so that I know if other people also there? Okay.
I wish I could come, but I was not there. Yeah.
Yeah. So the conference was held at this second largest convention center in Thailand, and it's a huge 3-storage convention center. It was the first built international conference center in Thailand. So it's just a very large scale, and Ethereum Foundation pretty much take entire convention center all to themselves because just the amount of people attending was just massive. So how many people attend? Over 12,000 people. That's the largest, biggest Devcon ever. For comparison, 2 years ago, there's only 6,000, and 8 years ago, there's only 4,000 attendees in the previous Devcon. So it's really grown tremendously. And apparently, the reason why they have in the Devcon 6, they only have 3-day conference, and this time we have 4-day conference because there's so many people want to speak. They receive 3,000 speaker application, double the previous Devcon. So definitely there's a lot of interest, a lot of research going on. People want to share. Okay, of course, Vitalik was there. His talk always talk about Ethereum, almost like introduction, but also lay out some the philosophy behind Ethereum and talk about what is Ethereum. That's probably the most challenging topic because compared to Bitcoin, the purpose is well defined, just a digital gold to store value. Where Ethereum is a little bit harder because it can be many things. It's an infrastructure. So it depends on what do you want to build on top of infrastructure. So here, Vitalik said, Ethereum is a world computer. It basically is a digital infrastructure where you can do any kind of a computing, and then because of that, you can build on-chain economy, like a decentralized exchange and tokenized a real world asset and all kind of application. And we have a very, very diverse, large global community. So that's what Vitalik will describe what Ethereum it is. He also emphasized that for Ethereum, decentralization and security have a higher priority over speed, over scalability. Speed is referred to how many transactions per second, those kind of matrix. So especially for layer 1, decentralized layer 1 and the security is the most important things that Ethereum try to have. And then we have a talk by the executive director of Ethereum Foundation, Aya Miyaguchi. And she used an analogy to describe Ethereum ecosystem as an infinite garden, and where the Ethereum Foundation is like a gardener, try to nurture the growth of garden, but not control them. So they also that they use the term infinite garden means that they are very inclusive. There's a lot of diversity. They want to support different kind of project, different kind of ideas, and from different countries to build the Ethereum ecosystem. And she also talk about that Ethereum is built for long term. They are trying to play an infinite game rather than a finite game, which mean different. It can guide the philosophy, the strategy of Ethereum Foundation. How do they cultivate the diverse ecosystem? Here's the top 10 topic that was discussed at the Devcon, this conference, and some of the topic has been evergreen topic. For example, protocol development. Every year there's a talk. Usability is a very common topic in the past, but there's also some relative new topic or has not been talked to a lot in the past. For example, cypherpunk and privacy. What's the value? What's the core value of a cypherpunk? How is that reflected in the Ethereum ecosystem? As some of you might know, cypherpunk value permissionless, value privacy, value open source software development. So that's the core value of a cypherpunk. And this conference also talked quite a bit about the application, Ethereum real world application, and what has Ethereum been used for in the real world, not just for price speculation, but there's real usage. Then another relative concentrated topic was applied cryptography. There's quite a bit of research going on cryptography and how they can apply to Ethereum to make it more private, make it more efficient. So it's a very hot topic. I'm going to show you some of the topic, some of the area that was discussed in the area of applied cryptography. So here is some of the topic they discussed at the conference. Zero knowledge proof probably is you're probably all familiar with. It's not something new. It has been talked for a while. Quantum resistant cryptography is probably a little bit relatively new, as you probably know that the quantum computing is coming, even though still right now still not practical, but within 10 years or so maybe become reality. So if you have quantum computing, you can easily crack the encryption. So what we're going to do? The good news is that there are quantum resistant cryptography that can help to do that. So another one is a programmable cryptography, which is also relatively new to the Devcon. And here is that you can upgrade, can customize your cryptographic operation, especially like a smart contract, which has a lot of cryptographic operation. Programmability really add another flexibility to the smart contract. So that's a little bit about applied cryptography. You can read more. You can do your own research on this 5 topic that if you find interesting. So I'm not a cryptographer for myself, so I'm just put out the topic so that you can do more research if you're interested. the biggest announcement at Devcon is actually by Justin Drake, who is a lead researcher at the Ethereum Foundation. So he made a proposal on the first day of the conference at 5 p.m. He announced his proposal, which he has been working for over a year or so. It's called Berachain. So Berachain is a redesign. Is a redesign of the Ethereum's consensus layer, and is aiming to achieve number of a feature. First is want to reduce the requirement of stake ether if you want to run a validator. Right now, as you know, if you want to do be a solo validator, you need 32 ETH. He want to reduce that to 1 ETH, which will allow more decentralization in terms of running the validating node. You also want to reduce the block time, make the network more efficient, faster transaction, and finally is incorporate ZK knowledge proof. In this case, it's called SNACks, to increase the privacy on the chain, and also that to make the chain more quantum resistant. So that was his proposal, and the timeline is actually quite long. He estimates that it will take 5 years to achieve the release of this proposed Berachain. So the community reaction has been mixed. While there's people say that steady and slow is good because the Ethereum ecosystem has been supporting a lot of application, a lot of value lock. As Johnson mentioned, there's a lot of token was running on top of Ethereum. So we have to be sure we cannot focus on speed, but focus on safety, focus on scalability. So that was the support for the proposal. But some Ethereum community member complained that 5 years seems just too long. Why not break down all those improvement into a small chunk so that you can release each improvement gradually over time, so that you don't have to wait and the end of the 5 year to have all the change at once. So that was the reaction from the community. Okay, last slide. ZooPass. ZooPass is just a zero knowledge credential identity management system. So the conference actually use it to register for your sign in, and so that you can exchange information with other attendee, and also you can prove that you attend the conference by collecting certain NFT to prove that. So the proof of attendance. So that's interesting, and I know Ed was have that similar experience. So we'll see what applied cryptography will bring us the new feature in the future. Okay, so that's all I have for the highlight from Devcon. Any questions?
I just want to say that these were the frogs that they were giving away at the conference. And here's the QR code at the back. If you scan these QR codes, people with the ZooPass app could connect with my user wallet. And the interesting thing is, these QR codes are dispensable. I could make a RFD card if I wanted to, attach it to my phone and say, hey, you want to connect with me? Touch my RFID, and you could like put your account on these RFIDs, these QR codes, and put them all over the place if you really wanted. It's really it's really interesting.
Yeah, it is. I did try the RFA, the little exchange that you can exchange contact information with another person simply by tagging your phone to another person's the RFA the tag. So it's very convenient.
Is that like a contact that gets shared, or is that like a wallet connection?
It's not necessarily a wallet connection. It's more like the whole platform facilitates a connection between me and you, for example. And like what happens is once we're paired, you know what my user ID is. I know what your user ID is, and then because we're paired, we can also share information to each other. Like I can tell you what my Telegram is or what my email is.
Oh, okay,
and vice versa. Yeah.
Gotcha. Okay. Cool. That's cool.
It sounds kind of stupid and something like we've heard before, right? But
I guess you'll have to try it, like to experience it.
Yeah, I mean, like from the surface level, it's something that we've all experienced. We know what it looks like, but from the back end, the platform is facilitating the whole experience, and they don't even see what the connections are. They don't know who connected with who. That's interesting.
Oh, I see. I see. Yeah. That's cool. Very privacy focused.
Mm-hmm.
Yeah. Speaking of privacy, actually, I think it was during our meetup, there was a news that came out that a federal court in the US ruled that for Tornado Cash, the contracts are like the fact that the OFAC sanctioned the Tornado Cash contracts are an overreach, and that the contracts itself are immutable. So that sets like a pretty good precedent for any smart contract developers out there. Like as long as your contracts are immutable and you cannot change it, like it's treated as open source code. And you have a federal court ruling to back it up.
Oh, that's great news. That's great news.
Yeah, it's big. I think it's what a lot of developers wanted to see. Yeah,
absolutely.
Yeah, okay. I'll share a link soon in the chat. But yeah, I guess like we can get started with the first speaker, right?
Yes.
All right. Okay, everybody, welcome Wilson. Wilson is the CEO of Honeypot Finance. It's a Berachain OG project that launched in 2022. The project raised 1.4 million and over 2 million of NFTs were minted in the first 2 days of the launch. And right now, Honeypot Finance is building a community-led DeFi Hub and a proof of liquidity accelerator for token launches on Berachain. And the unique thing is it's DeFi Hub. It solves the liquidity segmentation issue, saving time and cost associated with finding a trading venue. And this was recognized at ETH Shanghai for its batch A2MM model that featured advanced anti-sandwich attack and anti-slippage capabilities. So very excited to hear about this. We've had Berachain earlier, I guess, during our meetup, and like this is one of the premier AMMs on that. So welcome, Wilson.
Hey, can anyone hear me?
Yep, we can hear you.
Sounds good. So let's get started. Let me share the screen first. Can anyone see the screens?
Yes.
Yeah, we see the Dropbox PDF.
Yes, it's a PDF. So how do
you can use the okay. Can you show us as a slideshow?
Yes, so it's can you see the screen, Neil?
Yeah, because you have the menu on the top, so the slide is not fully
I'd like to suggest the full screen, the square next to the 95.
The square.
Yeah.
Yeah, beside 95.
Okay.
Yeah.
Okay.
Okay. Now it's better.
That's good.
Yeah.
So the Honeypot Finance is building the POL Accelerator on the Berachain. So one of the important things that we think it's a big problem in the DeFi is the segmented liquidity. So for example, if someone going to Launchpad, they launch a token, then the token is hanging there. and the project they need to find a place to list a token. So this takes the time and money to do that. And for a DEX, so often the case they need to use certain tokenomics to attract the liquidity provider to come. So simply this model would actually put a lot of project to death because the amount of the token that they spend often costs too much. So our model solves the two problems at the same time. And later on, we also use this model to expand to launch the meme token, which is even more exciting. So the basic model looks like this. This is kind of the data that we have. The testnet data, we are currently the #1 protocol on the Berachain testnet in terms of the number of the holders and in terms of the swap number. So the basic model would actually look like this. So for example, if there's a project they want to launch a token, so we pre-construct an AMM pool first. So they put the token into this AMM pool. So initially, because they don't set any predetermined price, the price was actually determined by how many users participate this launch. So for example, let's say there's a 10 user count and they put the 100,000 USDT down, or 100,000 the equivalent amount of the HPOT token down to this AMM pool. So it forms an LP tokens for all of them. And 100,000 would actually means that 100,000 of the risk token, for example, USDT, or the other half is 100,000 of the project token, so when the race ends, each party got 50% of the LP token. So and this LP token would directly add to our DEX. So user and project, they become the LP provider to earn the transaction fee. And when plugging into the Berachain's proof of liquidity, so they will actually also to earn the BGT and the other protocol yields. So essentially, this process solve the problem of the liquidity segmentation as liquidity directly add to the DEX. And all of the participants, whether the project and user, they all become the LP provider, and they mine the long-term yield in the long term. So that's kind of the model that we built from the scratch. And so that's kind of the thing that we built for initially. And later on, so the meme token launch that becomes even more popular. So one example is Pump.Fund to launch the meme token. So unlike the Pump.Fund use a bounding curve model, so we use the same like a FTO model with a little bit of trick. I can explain the change that we have had in here. So in the original FTL model, you can see that the project got 50% of the LP token. But in the case of launching a meme token, so we shouldn't really assume there's a one of the token because the maintenance is going to be a problem if we assume that a token owner is going to constantly maintain the token. Often the case, we see the community takeover, CTO. So one of the things that we make assumption based on the original FTO model is we burn the 40% of the LP token and assume there's no owners. In this burn of 40% of the LP token is actually placed into another protocol called inter-POL that is still is sent to the data address, but it can mine the BGT. It's really technical. I wouldn't really go too much deep on that. But so So basically, all what I want to say is actually this 50% of the LP token going to the project. That's not going to be the case for the meme token launch. We burn most of them, and we reward some of them to the token deployer, which is 5%. And 5% goes to the to our platform. So that's basically the model that we built. And because it's actually the liquidity launch model, so one of another features that we make is, so if the meme token launch is not successful, the user would be able to refund immediately. So they just need to claim the position and then refund. So this makes the money to be concentrated on one of the top meme token in the launching phase, which we call that to be the pod phase in the that's another thing we make unique for our model. So clearly you can see compared to the bonding curve model, so we are the low risk model as the we don't buy and sell on the bonding curve, and all of the people who is receiving the LP token and can use this LP token to on the DEX and mining the long-term interest. So recently we made a further experiment. So we see how hard is actually some of the TikTok topics. For example, what really hot topic on the TikTok is a chill guy, chill girl, and those kind of people are actually constantly just making the new content of the chill guy and the chill girl. So we can think of the chill guy, chill girl as a big IP made by a lot of the individuals, not the company. So all those individuals are the creator of this IP, compared to the IP made by the Sony and Disney. So there got to be a way to monetize. And luckily, I think our model fit well in this situation, because when you launch the meme token with pod to pod model, so we firstly heavily incentivize who actually launched this token. So someone who launched the token got 5% of the LP token, and so you establish a deep 100% liquidity pool if it hit the 120K market cap, and all of them got the LP token. So they become to mine the Berachain proof liquidity BGT, which is a very governance token, and also transaction fee, and other protocol interests like DYDX and Atom, so one of the recent updates that we made for this protocol is actually we turning into the DEX into the concentrated liquidity, and use the ALM to manage the concentrated liquidity, basically. So when user made the last deposit, we actually turning that to the ERC 721, and through some of the wealth from the AMM, it turns back to the ERC20. So it appears like there's an advanced strategy to manage the price range and help the user to mine the yield. So this could actually increase the yield to be maybe some crazy 200% or 300% APY. That really, if we think from the point of how to launch a token, it became all of them got the LP token, then received the long-term dividend, and which a crazy APY. And this means actually the railroad IP which doesn't have any owners. Everyone become the owner if you decide to participate the launch. So then everyone who participate in the launch become the owner of the this IP. So it turns to the real world mint to the RWA on chain with crazy yield. So that's kind of the mechanism that that we built along the way, and to revolutionize how meme can be. Used to be, it could be really risky, and it's just like a gambling game. But we made a little trick of the model. It turns out to be really not so risky, but you become part of the one of this IP, and you earn the crazy yield for the long term, and this yield could have just been the LP provider could actually mean that 200% to 300% APY, and you still enjoy the price pumping. So so that's about the kind of the model that we built. Yeah, that's pretty much about it. Anyone have any question?
Thank you, Wilson. We had a speaker from Berachain speak at DeFi Toronto before, but for those people who has not attended that event, do you mind explaining what is proof of liquidity consensus? Like, I understand that Berachain use a proof of liquidity consensus rather than traditional proof of stake. Were you able to just educate us the difference?
Sure. Actually, our team member was actually at Devcon like a couple of days ago. We hosted a Saturday event for how the top protocol, innovative protocol can collaborate with the validators. So the innovation coming with the proof of liquidity is all about the validators collaborate with or sort of just bribe with the protocol and how protocol actually engage with the users. So that's all about the proof of liquidity. I'm just going to actually down to explain very simple word to explain what's the difference are. So in the proof of the stake, that's a lot of the layer one chain adopt. For example, the Ethereum where you stake 32 ETH and you earn the passive is by validating the security of the network. And as a validator, you don't participate in a lot of the on-chain activities, but you receive most of the revenue which chain offers to you. And the same case for the Cosmos. So you stake item, and or the difference is actually if with Cosmos, so someone can delegate the item to the validator. So it's called the DPoS model. So Berachain under the hood use the proof of stake, because you got to stake something to actually make the chain to be secure. And the kind of model that they use is it's the same as the Cosmos. It's DPoS. One thing that they did particularly interesting is they created some mechanism to allow the interaction between the protocols and the validator can share can share and exchange the income to the protocol, and the protocol can bribe the validator. So here's how it works. So they created 3 tokens. Berry is the gas token, the BGT is governance token, and Honey, which is their on-chain stake token. In most cases, you can think that it has not so much to do with the rest of the economy. Let's get rid of that. And so BGT. So how you can gain the BGT is actually you activate the validator with bearer gas token, and then accumulate the BGT over time. So you cannot buy the BGT from the public market, but you can burn the BGT with 1.1 ratio to the bearer. And with the BGT, you can return all these on-chain activity to actually interact with the rest of the protocol to make you to earn more yields. And so as validators, so they are actually putting the BGT emission to the middleware called the reward vault. So the other protocol can, for example, can use the ERC20 token, 01 governance token to bribe the validator. So okay, so validator, are you interested to receive my ERC20 token? Yes, I'm going to emit some BGT token to you, and I got some ERC20 token. This is kind of called the bribe and exchange of the token. So from that sense, the protocol got the part of the governance token, which is the BGT. So it's not only the validator got, and the validator themselves, they're competing with this BGT, because initially no one knows how much BGT they receive. It's all competing with the BGT weight. How are you going to make your BGT weight bigger? You make more protocol to actually work with you to delegate the reward about to you. So so essentially it allows the collaboration mechanism between the protocol and the validator, and also competition between the validator and this validator and the other validator, these protocols and other protocols. So it turns out to be, if you think of the POS as the Soviet socialism economics, then proof of liquidity under the hood use the POS as the security layer, but it promotes the freedom capitalism. So that's really simple way to explain how proof of liquidity works.
Can I ask a question? So Wilson, what's the difference between Aerodrome and your mechanism? It's almost, I feel there's a kind of parallel because they have bribes, they have voting mechanism, and you have your own lease mechanism. Can you tell me a difference?
You mean you're talking about our protocol or talking about proof of liquidity?
I'm talking about your product, like Honeypot Finance, like and also the concept of proof of liquidity. In Aerodrome, usually they incentivize liquidity providers by bribing rewards, which they do weekly every Wednesday. So what is the subtle difference between the Aerodrome mechanism and your Honeypot Finance? Yeah.
I don't think you are talking about the same thing. So the thing that you should compare our protocol is actually the pump.fun, as pump.fun is actually meme token launcher, right?
Yeah.
So
I'm talking in terms of incentive mechanism. Yeah.
Again, the incentivization mechanism, okay. We are actually launch a meme token, and they become the LP provider and receive those incentivization. We simply making the bounding curve model to the LP liquidity model. So that's the case that you compare the other product. I don't think there's any relation or anything that we can compare. I think the question that you are asking is more relating to the the proof of liquidity. The proof of liquidity, so basically, so it's those guys are actually from the Olympus DAO, right? So it's very similar to the part of the Ponzi is actually similar to the Ponzi made by the Olympus DAO. Think of all the on-chain protocol, they use their ERC20 token to bribe you and for the BGT emission. So it's sort of like a for example, to the Ethereum or to the Cosmos or to the other chain or to the other layer one chain. So it's like the one pair attack to the other chain, because it always like ensure that there's a potentially more that a protocol can gain. But in the meantime, because all the protocol use their one ERC token to grab, so what's going to happen? This makes this chain to be really secure, because how this chain can be fucked up. It only can be fucked up with all the ERC20 token that like the other protocol fucked up first, and then with no with not so much value to do the exchange, then the whole chain economy it's actually is fucked up. So it's actually on the other hand, it's actually using all the rest of the ERC20 token, like our protocol, as a backup or for their token price. That's a little bit complicated. I wouldn't really go into the detail, but the mechanism, like mechanism under the hood is actually they made an interesting mechanism to do the design to reduce the selling pressure of the bearer and back up their potentially token price in the long term.
Thanks a lot.
Thank you, Wilson. Okay, I think given the time constraint, I think we should move on to the second speaker. Is that okay with everyone? Okay, so let me introduce Edward Buchi. On internet, he also named himself Listen. So I actually know Edward for many years. We even participate in a hackathon together, where I know we won the prize together. So I know Ed is for a long time. When I met him, he was one of the co-founder of Bitcoin Bay, one of the oldest Bitcoin meetup in Canada. So there's a lot of history here. And now Ed is the CEO of Baptisia Venture. He managed the business development and product innovation, and spearhead the project that drive the Web3 innovation. Today, he's going to talk about alignment and accountability in the Web3 community. So I'm going to pass on to Ed. Go ahead, Ed.
Hey guys, and Victor, thanks so much for the glowing introduction. That's very, very kind of you. And yeah, I remember those hackathon days. Those were a lot of fun. Yeah, so guys, give me a second. I just want to share my screen, and hopefully you guys can see it. Okay, yeah, hopefully this is legible. So what we're gonna, or rather, what I'm gonna present to you today is basically Sacred Protocol, our project at Baptisia Ventures. We've been developing it and iterating on it for like the better part of like 2 years now. And we've been working with a lot of communities trying to solve very simple problems, but problems that have been plaguing Web3 communities for a very long time. And what we've noticed in Web3 communities is that working online and working anonymously and doing work for an extended period of time can be really, really jarring for a lot of people. And it's always hard to feel like you're getting ahead in things, right? So like I know when a long time ago when the Ethereum meetups took place, right? It was a lot of grunt work to host those meetups and to hold the sessions, do the presentations, right? And a lot of if it weren't for the magnetism behind Vitalik and the founders of decentralized
Bitcoin Decentral, the people who volunteered wouldn't have stayed for the long haul, right? And it's very hard when you're in the moment, when you're growing your community, to feel like your work is meaningful, right? So it's very hard to get rewarded. It gets even worse in the digital realm, right? And some projects need that time. And some people who stuck around with the decentral meetups and volunteered there. I wasn't one of them. I just witnessed all of it happen. And I remember a lot of the contributors and the volunteers who were at that meetup. There was Josh Stark. There was this guy who was talking about Lightning Network on Bitcoin, right? A lot of those people were just making presentations and just helping the community. And then they persevered, and then they're doing really well. Even the guy who wasn't technical, right? In those decentral meetups, all he did was just show up to the Wednesday meetups and put chairs around and then make sure everybody's seated comfortably and water's working and the lights are on. That guy, right now, I haven't seen him for a very long time. He's actually sitting on a lot of Ethereum, right? When it showed up, right? So like, talk about sticking it out for the long run. So this is the product that we want to solve, right? We want to help community leaders to activate, grow, and reward their Web3 communities. So help them stay in the long haul and really like grow these Web3 communities that are much needed in the space today. I'm gonna see if this moves. Okay, guys, I hope things are legible. Please stop me if things are not clear. So the things that we're solving are user fragmentation, meaning that if you're working with your community, you're on different platforms. You don't know if you're being seen. You don't know if your work's actually being recognized. And you have to like operate on Telegram. You have to operate on WhatsApp and on a Discord and on forums as well. That's what I mean by user fragmentation. And then there's a Web3 credibility crisis, right? What I mean by that is it's very hard to see people's work and their reputation carry over with them as the years go by. And then there's content engagement gap. What I mean by this is when people promote things on the internet, it's very hard for the content to be seen by the wider public. So it's hard, that's a problem because it's hard for other community members to read the content, and it's hard to get new people into the community. So if we solve these three things, Web3 communities can really like ramp it up and get the word out, get their ideas better, and the contributors who work inside the DAOs and the Web3 communities can actually do really well. So what we're putting together is essentially a cross-platform tipping mechanism. And I can go all describe and read this out to you, but I think a quick demo to you guys would really make sense. So what do I mean by cross-platform tipping? It means that if I tip you on Twitter, or if I tip you on Farcaster, or if I tip you on a forum, it all goes to one balance, right? So let's see that in action. So what we have here is a forum, right? And inside this forum, we have the ability to tip. We built this forum for community, so it's available for products to run discussions and make proposals. And guess what? If a person made a really good proposal, I can tip the proposal. I can say, you know what? Here, this is a really good, well-written proposal, have 10,000 points. Let's say I like this concept, or sorry, I like the feedback this person gave. I can give 10,000 points. So this sounds really simple right now, and when you're looking at it, but this goes a long way in helping communities really get really good signal on what content needs to be made. And we learned all of this from DGen. What happens is, like, you got tipped by an influencer, you got tipped by a moderator, right? As a content maker, you're like, wow, I want to make more of this content. And then you see other people can see content creators get tipped, which means other people know what good content is, and they make that as well. So everybody now knows what good behavior is in the community because of this tipping mechanism, and it's all social. Well, now this is just in the forum. Let's see it in the in action in Twitter itself. So this extension over here is my balance of crypto points, and what happens is I can now. And I'm here on Wilson's post. I found it while you were discussing it. It's actually a really interesting idea. I can also tip Wilson 10,000 points, and it pulled it from my balance over here. And the thing is, Wilson doesn't need to have a sacred account or an extension. He just needs to know that I tipped him, and then he can redeem it in a future period. So not only that, we can also issue missions. And what I mean by missions is, like, let's say we want this post about the meetup to be promoted. And what that means is I can click turn into a mission, and I could say like and retweet this, give it 100 points, right? You can literally give bounties for promoting content on the internet. And then here we go. I'm just skipping that part and just going to the mission side. Let's say here are some missions. And if I go and like this tweet over here, I get the points for this. And by the way, when we started, Sacred Protocol used to be called Sacred Finance. Tornado Cash is, in a sense, a progenitor of ours, or our spiritual parent of ours. So, like, knowing the story and seeing how it goes is really really important to us. And if you guys are really into privacy and what it means for DeFi and making things decentralized, this is a story to watch. So yeah, let's say I like and repost this, and I like it. I achieve the mission. Right, I'll just refresh it, and I should achieve the mission. Oh, there you go. So now I get the points behind the mission, and it's in my balance, right? And why am I collecting these points? It's because when I collect the points, I can then convert them to anything that the community wants. So if Bankless issued this mission, I could convert the points into Bankless tokens, or I can convert the points to ETH or whatever this community is giving the bounty for. So let me skip ahead to here. So yeah, we're building cross-platform tipping. Users can tip each other no matter what platform they're on, and it's not only community leaders can do the tipping and the mission building. It's actually other community members as well. So we're making the whole job of community building decentralized. Not only like moderators need to do the work. So in an example of how do we get a mission out across different platforms, how do we reward that? Let's give an example, right? So leaders can reward members automatically. We know this. Zeely and Galaxy does this really well. A community leader has a proposal on a forum, and they want people to comment on the proposal. They want people to publish code for the proposal and hype it up on X and Telegram. So this mission in itself has 3 multiple components, right? And it's on different platforms. So let's say different contributors do the work on different platforms. Because they have the sacred mechanism, they can all be tipped by the community leader, all right, for this same mission. But not only that, other community members can tip the contributors for doing good work, right? So in this way, we're creating a situation where nobody feels like they're not being recognized. So that's what we mean by solving for fragmentation. And the thing is, these tips are also on chain. So you can really build an online reputation behind how much points you get. So let's say you have 1 million points, you get X credential. You get 2 million points, you get a higher level credential for the work that you did. So yeah, that's the system, guys, in a nutshell. We want to build this MVP out. We want to start before the end of the year, or we're really like gunning for this. Be able to like swap the points for on-chain assets. We're using the blockchain called AO, which is built on top of Arweave. It's ridiculously fast, and we want to then have this tipping platform activated for multiple social networks. And yeah, we also want to think about doing credentials in the future. And you heard it here first. You guys are seeing this this deck. We're thinking of doing a token launch, but we don't know how that works yet. We need to know what 2 and 3 look like. But that being said, guys, thank you. Oh, this is more like a investor slide, but yeah, I'll leave it at that, guys. Thank you for checking out what we're doing at Sacred. And yeah, like if you know any communities that are new and want to like reward the community members, like reach out to me. I'm also looking for potential contacts within exchanges and dexes to see if we can make this mechanism work even more in a more liquid way. I notice, Shans, you have a hands up. I'm ready for questions.
Yeah, thanks, Edward. It's a very interesting presentation. The quick question was, this is like you're basically cross-platform coordinate kind of thing, I feel. So how would you prevent from, one thing is that, coordinate and any reputation management is the fake, reviews and gaming the system, where they group together, you scratch my back, I scratch my back, they give points to each other, how would you prevent that, because reputation is, you're tying the reputation to number of rewards or tips. So how would you prevent that from being gamed? That's just one.
Yeah, like I was actually at MCon a few months back, and one of the key things that I'm going to give 2 possible answers. We're still developing this, right? So one answer is to change the metrics, right? We learned this at MCon. Kevin Owaki from Gitcoin was talking about the Bernhardt effect, or the Bernhardt's law, or something like that, right? And what Bernhardt's law is about is that once a metric has been identified, it will be gamed, right? So it's all about it's all about changing the metric once it's been every time it's been abused. You have to refresh it every season or so, right? Gitcoin is thinking of changing metrics every Gitcoin season, right? So that's one way of doing it. And another way for us to make that possible is to really allow community leaders to decide what that metric is, right? It's up to the community leader to decide, hey, it's this many points, right? That mean you get the marketeer, or sorry, you need 10,000 points on X. That gives you the marketeer credential, right? But then the next season it could be 10,000 credentials on X and several comments on the forum, right? That could be for the next season, right? So our job is just to make sure that the users can, the community leaders can change the metrics and make that modular, which for now it is. Like they just need to issue the coin for something.
Thanks.
Question, Ed. One is what make the point has value? Like what gives the value to your point? That's number one. Yeah. Number two is that thank you for coming to speak for DeFi Toronto. We do have a Telegram channel. We have a Meetup page. Can we use your tipping point system
you can definitely
to
do that.
encourage our member? Huh?
You can definitely do that. Let me find the link to our extension right now, and then from that you can download it and start using it right away. The thing that we need to figure out, guys, is how the points have value, right? So we're working. This is where we need to chat with certain folks to like exchanges to make this happen. So before I go into that answer, Victor, Shans, I shared with you on the chat Goodhart's Law, the Kevin Iwaki's statement. So that's a good start to your solution. I don't necessarily have it in its totality. You know what? This is not a full-on complete idea, but this is how we think we can actually give value to the coin, right? So I don't know if you guys have. I mean, I come from design. I work with product teams. I work with tech people, and we use sequence diagrams to talk about a flow between different actors. To read this diagram, you just have to start from the left and then work your way down. So there's four actors here: a tipper, a sacred dApp, an exchange, and a new recipient, right? The person who receives the points. Now, I want to say that this is an initial mechanism that solves for just legal issues. It doesn't solve for everything yet. The legal issues that we want to solve for is we don't want to hold assets, one, and we don't want, because that means we need a custodian license. Number two, we don't want to trade the asset, right? Which means we don't want to be a money transmitter entity, right? We don't want that license. So we built this flow to design for that. So in this flow, guys, a user connects a wallet to Sacred, and then the tipper, when that happens, sends funds to an exchange wallet that is underneath Sacred. I hope that makes sense. And then what happens is the Sacred dApp tells the tipper that they have X number of points that could be used to tip different posts, right? So what that means is if I fund my wallet $10,000 worth of Ether, I have 750 worth of points to tip, right? So now that I have 750 points, what am I going to do with that? I'm going to tip posts. When I tip a post, what happens is the exchange swaps the crypto for a stable coin. So we know it stays in one price. We know it stays solid. What happens there? It stays inside the exchange. We don't want to hold the funds while the post still has the funds. The idea is the exchange is treated like an escrow account. And then the exchange then sends the funds to the recipient when the recipient signs up for Sacred and redeems the points. So this is our initial idea for creating value behind the points. We think we could make it simpler, but yeah, this is just solving for legal stuff.
My advice would be to get a token engineer to look deep into it.
Well, yeah, yeah, absolutely. Yeah, if you know some good people to start having coffee with, like, let me know.
Have you thought about pegging the point to a dollar value? 1 point equal to 1 cent or something like that?
Yeah, that's what's happening over here. When a point is assigned to a post, the Ether or the BTC is converted to a stable token, right? So that if I give a post 10 points, $10 is stored inside the exchange to be redeemed at any time in the future.
Any other question for Ed? Okay. Any other question you want to talk about us, any of us, or you just want to voice any opinions?
Sorry, are you asking the group or asking?
Yeah, the group.
Oh,
yeah.
sorry.
The group is any question for Ed, or if not, any question to previous speaker or the news recap, any community announcement, like you are working on project, you want to let the community know, or you're hiring people, or you're looking for developers, any announcement?
Just a remark from my end, like I did have some experience at Devcon on Farcaster, and then I remember when it went wild, like every post on Farcaster was about Devcon, and a lot of farming was going on for that. And then I left Farcaster because it wasn't a very pleasant experience. But I'd like to see how this goes out. At least, yeah, it looks like there's some economic incentive to prevent farming, but yeah, scammers out there keep evolving, right? So we'll see. Oh, you're mute.
Yeah, guys, I shared with you the link to the tipping protocol. So guys, you can check it out right now and download it and start tipping each other.
Nice.
Thank you. Nice.
Yeah, so in the future, guys, the idea is when we can put value behind it, right? You can set up missions to reward people. If someone promotes, or even simply, if someone promotes DeFi Toronto stuff, you can tip them points, and then they know that they're doing good work, and they can actually feel like they're being rewarded.
Indeed, we're always looking for our members' support, whether recommend speakers, recommend sponsors, help us finding venues. So all the things we need our community members' support. So nice to have a tipping to show our appreciation if they contribute.
Yeah.
Absolutely. I guess that's brings us to the end of the meetup. If no more community announcements, but it's fantastic. Last meetup of the year, great stuff, and yeah, tip each other in the new year, appreciate each other, and stay strong together. I think I like that part, Lisa, in your talk where you talked about the community, and at the end, it comes down to this. So let's be there for the long haul, and see you in the new year.
Yeah, see you in New Year. Thank you for coming to attend this event, and thanks Ed and Wilson for speaking.
I'll send you some stuff, Ed. Yeah.
Thanks.
Great. Okay.
Yeah, great meetup, guys. Thanks for hosting it. And yeah, great way to end the 2024. Looking forward to next year with you guys.
Indeed. Thank you, Ed.
Thank you.
Bye.
Bye-bye.